For this session, we need to talk about reforms, filings, and compliances. So this particular topic is essential for us to determine the requirements or the tax liabilities of a particular taxpayers. So without the particular tax liability, then we cannot say that a taxpayer is subject to the payment of a tax or a possible penalty in the form of surcharges, interest, and compromise penalties. So whenever a taxpayer needs to file a return, the taxpayer must have a tax identification number. And if ever there is no tax identification number for the taxpayer, then the taxpayer must acquire a TIN. To acquire a TIN, the taxpayer must file in the appropriate RDO the appropriate forms to get for the TIN. Now, in determining the appropriate form and the tax liabilities of a taxpayer, the taxpayer must be classified whether the taxpayer is a one-time transaction taxpayer or ONET or a recurring taxpayer. So this particular classification of taxpayer is needed to determine again the appropriate forms and the tax liabilities. Now, let's learn about the filings and compliances of these taxpayers. Let's start first with the definition of a tax identification number. A tax identification number is needed by any person, whether natural or juridical, required under the authority of the Internal Revenue Code to make, render, file a return, statement, or other documents shall be supplied with or assigned a TIN to be indicated in the return, statement, or document to be filed with the BIR for its proper identification for tax purposes. Therefore, if we look into the taxpayer, we determine whether the taxpayer is natural or juridical. But regardless whether the taxpayer is natural or juridical, then the taxpayer needs to acquire a TIN, And this TIN is needed to make, render, or file a return. Now, the main question is, how can the taxpayer acquire a TIN assuming that particular taxpayer is not yet registered? So, to apply for a TIN, we need to determine the type of taxpayer. As we said, the taxpayer can either be a one-time transaction taxpayer or a recurring taxpayer. If that is a one-time transaction taxpayer, such that they are only liable to CGT or donors or estate, etc., then the form needed is BIR form 1904. But if that is a recurring taxpayer, such that it is a business or an employee, for business, a business can either be considered as a partnership or a corporation or a self-employed individual or mixed income individuals. Then, for employee, we need to determine whether this employee is a compensation income earner or it is OCW. So if ever that is a business in the form of a partnership or corporation, the form is BIR form 1903. If that is self-employed or mixed income individual, we have 1901. If compensation income, purely compensation income, 1902. If that is an OCW or overseas contract worker, it is 1904. So again, to determine the appropriate form to apply for a tax identification number, you need to determine the type of taxpayer, whether the taxpayer is ONET or recurring. If the taxpayer is ONET, then you only need a BIR form 1904. But if the taxpayer is recurring, then you need to determine whether the taxpayer is a business taxpayer or an employee. If business, a business taxpayer can either be a partnership or corporation or a self-employed or mixed income individual. If that is an employee, it can be a compensation income earner or an overseas contract worker or seaman earning purely foreign source income. So the forms needed are for ONET 1904, Partnership or Corporation 1903, Self-Employed or Mixed Income 1901, Compensation Income 1902, and OCWs 1904. Now, since we already learned the appropriate forms needed for the application, now let's look into who, when, where, and the effect of your registration. Let's start first with who. For the application of TIN, every person subject to any internal revenue tax shall register once with appropriate RDO. Therefore, once you are subject to a particular tax, you need to register to the proper RDO. We said you can only file a return if ever you have 18. So to apply for 18, since you're subject to a tax, you apply to the appropriate RDO. So the question is, what is your appropriate RDO? Normally, that is your place of residence. So if you are from Baguio, then you must register in Baguio. And when do you need to register? Normally, before commencement of business, if you are a business taxpayer, or before, of course, paying the internal revenue tax. So if that is a business, again, before commencement. But if not, and you are only liable to any tax, then before filing, because you cannot file or make a return without the appropriate tax identification number or without the appropriate PIN. The next question is where. The filing must be done in the RDO having jurisdiction over the head office, branch office, place of production, or storage place. As we said earlier, if ever the residence is in Baguio, then the proper RDO is in Baguio. However, with the advent of technology, we have now the so-called OROS, or the online registration and update system. So what is this online registration and update system? Unlike before that you need to manually file using the BIR forms 1901 to 1904, now you just need to create an account in your ORUS, or your online registration and update system. In creation of your account, you can now register using the BIR's eService. That is the ORUS. So you register through eService, then you can now create your team. Therefore, registration can be done now either manually or using the e-services of the BIR, which is known as your ORUS. Now, what is the effect? The effect is that there is a certificate of registration which will be given, BIR Form 2303. But the question is, who will receive BIR Form 2303? We said a while back the taxpayer can be classified as either ONET or a recurring taxpayer. For ONET, there can be no Form 2303. For recurring, that can be either business taxpayer or an employee. If business taxpayer, you are given 2303. For employee, there is no Form 2303. Therefore, the loan type of taxpayer that will receive a BIR Form 2303 or the certificate of registration are your business taxpayers. If you are not a business taxpayer, therefore, you will not receive a BIR Form 2303. Now, let's look into the BIR Form 2303. So how does your BIR Form 2303 looks like? So at the top portion, you have there the heading. It provides there the Revenue District Office or the Revenue District Number. So this is the Revenue District Office or the RDO. Now, let's look into the contents. First, we have here your TIN number. The taxpayer's name will also be indicated and the TIN issuance date. After that, your business address will also be provided. Furthermore, the tax type will be given. So the question is, what is a tax type? What is a tax type? So tax types are the different tax liabilities the entity must make and file. Therefore, if the tax type is included there, you must make and file. And generally, there are three common tax types. So first, we have your income tax. Then we have your business tax. Then we have your withholding tax. For income tax, this must be filed either first quarterly, and then we have your annual. For business tax, you can either be subject to VAT or percentage tax plus your excise tax. For withholding tax, there are two main common withholding tax. We have your compensation, withholding tax on compensation, and expanded withholding tax. Normally, these withholding tax are to be filed or to be paid monthly, quarterly, and annually. Right? So, depending on the type of taxpayer, the tax type will be indicated. Sir, question, are all the tax types applicable to each taxpayer? No, only the certain tax type applicable to that taxpayer. So, for example, a realty company which does not have any employee. So, the normal tax type are income tax, business tax, and expanded. So, if there is an employee, then there can be a compensation withholding tax or withholding tax on compensation. But what if there is no withholding? Normally, withholding is only provided to those taxpayers or considered as top taxpayers. So therefore, if you are not considered a withholding agent, then your main tax type is income tax and business tax. But what if you are a withholding agent? So you have income tax, business tax, and withholding tax. And for withholding tax, it depends whether you have employees or not. If you have employees, you are liable for withholding tax for compensation and with expanded withholding tax. But if you don't have employees, purely expanded withholding tax. Furthermore, the company name, the industry code or line of business is indicated. But what is really important here is your TIN, the date your TIN was given, and your tax type. Why is the date your TIN was given important? The date wherein your TIN was given is important for you to determine when you are liable to pay. So it determines the start date that you are considered liable to make, file, and pay returns. So if ever, you can only be made liable once you are given already your TIN and your certificate of registration. And what are the three common tax types? Income, business, or withholding tax. Who can be given BIR Form 2303? It is only the business taxpayer. Self-employed can be given. Business in the form of partnership and corporation can be given, but purely employed individuals and one-time taxpayers cannot be given BIR Form 2303. Please take note of that. Next, we have now your cancellation of registration. So we said you are liable to the taxes provided in your BIR Form 2303. So whatever are the taxes provided in your BIR Form 2303, you must continue to make file those particular returns. However, if you are now to close or terminate, you must file BIR Form 1905. So generally, 1905 is provided for cancellation or termination. Furthermore, if you need to update any of the information, BIR Form 1905. As a general rule, we said you remain liable for the tax types unless and until the BIR Form 2303 is canceled. Okay, so for example, 2022, you registered. 2023, you're still doing business. However, during 2024, you stopped doing business. What will happen? On 2024, if you did not terminate, you are still liable. But if you terminated using the BIR Form 1905, then you are not already liable. Just take note, you continue to become liable unless and until the BIR Form 2303 is not yet canceled. But once it is canceled, then you are not already liable. So take note of this. If you will cancel or terminate your business, do not forget to also cancel or terminate in the BIR. Do not only just do not just purely close or terminate the business. without closing to the particular agencies such as your mayor's office, BAR, DTI, etc. So especially in the BAR, because you will be subject to penalties. You will be continued to made liable in filing those tax types unless and until you will cancel your registration. Now, let's look into the different tax forms and deadlines. We said earlier that you have the different tax types. You have the different tax types. And these tax types are included normally in your recurring taxpayers, especially the business taxpayers. So the first normal tax type is your annual registration fee. Your annual registration fee must be filed using BIR Form 0605, and the due date is every January 31 or on or before January 31. So let's say you have a business, you must register that business annually, pay 500 pesos on or before January 31. Sir, what if I don't file within the due date? If you will not file within the due date, then you are liable to any civil penalties. Sir, what are those civil penalties? These are your surcharge, interest, and compromise. Therefore, it is proper that you must know what are the different forms and the deadlines on those forms depending on your BIR Form 2303. Again, those items are indicated, or those tax types are indicated in your BIR Form 2303. So when are you required to register, or who are required? Those registered taxpayers, except those earning purely compensation income, are required to pay the annual registration fee with the BIR. So here, we need to determine, again, if you are an owned taxpayer, are you liable? No. If you are a recurring taxpayer, such that you are a business taxpayer or an employee, business taxpayer must file, employee does not need to file. In short, those given BIR Forms 2303 must pay an annual registration fee. So how much does your annual registration fee cost? That is 500 for every separate or distinct establishment or place of business upon registration and every year thereafter. So let's say you are Jollibee. You are Jollibee. You have one headquarters and three branches. One headquarters and three branches. How much is your total annual registration fee? So 500 for every separate. So this is one separate. These are three different separate businesses again for the branches. So total of 4. You need to pay 500 for the 4 separate distinct establishment. Although they are operating as one Jollibee, however, you must pay for every separate or distinct establishment or place of business. So let's say Jollibee headquarters in Manila, one branch in Baguio, one branch in Tuguegarao, and one branch in Zamboanga. So those 3 branches must need to pay 500 pesos, and the headquarters in Manila must also pay 500 pesos. So total of 2,000 pesos. That is for annual registration fee. So aside from annual registration fee, again, we said we have the 3 common tax types. So what are those 3 common tax types again? We have your income, then we have your business, and then lastly, we have your withholding. We start first with income tax returns. So the income tax return, the form and the filing depends whether you are an individual or a corporation. If you are individual, you must file using BIR Form 1700, which is due April 15. These are annual returns. And then if you are not applicable to 1700, then file 1701, again due April 15. And for the quarterly, have 1701Q, due May 16, August 15, and November 15. Or normally this is May 15. For a corporation, you file annual using 1702 and quarterly using 1702Q. For 1702, the due date is 15th day of the 4th month following the close of the taxable year. So for example, the close of taxable year is August 31. So when is the due date? It is the 15th day of the 4th month. So August 31, let's say 2023, that is the close. So September, October, November, and December. December is the fourth month. So 15th day of the fourth month. So the due date is December 15. So that's how we count it for the annual. Again, 15th day of the fourth month. How about for the quarterly? It is 60 days from the close of the quarter. So 60 days from the close of the quarter. So let's say your quarter will close on August 31. Okay? Your quarter closes on August 31. When is it due? 60 days from the close of the quarter. So we have here September, that is 30, October, another 30, total of 60 days. So the due date should be October 30. That's how we count for corporation. So, sir, why? Because normally individual uses an annual calendar year. Okay? So calendar ang annual niya. While for corporation, the annual can either be a fiscal year or a calendar period. Fiscal year, any 12-month period which does not start from January or ends in December. So any 12 months, so long as 12 months not ending December, then it's fiscal. But if it's ending December, then it's calendar. That's for income tax returns. Then you have your capital gains tax returns that can either be on domestic stocks or real properties. For domestic stocks, our form is 1707 and 1707A. 1707 for the transactions or the monthly transactions, so transactional. 1707A is annual. The due date for the transactional is 30 days from the date of sale, while for domestic stocks is 15th day of the fourth month. So let's say, for example, you sold stocks, and that is subject to a capital gains tax on June 15. So when is the due date? The due date is 30 days thereafter, so that is additional 30 days. So you have 15 days left for June, plus additional 15 to get for 30. So our answer should be July 15. How about for a capital gains tax on real properties? What we use is 1706, that is 30 days from the date of sale. So another example here is, for example, you sold on January 5. So normally, we exclude the first day or the date of sale, and then we include the last day. So we exclude January 5. So what's left for January is 26 days. To make up for the 30 days, you have additional 4 days. So your due date should be on February 4. Okay, that's how we count for your CGTs, whether it's domestic stocks or real properties. Next, we have your documentary stamp tax. For documentary stamp tax, we have your BIR form 2000 or 2000 OT. What's the difference? If it's one-time transaction, then 2000 OT. If not, then BIR form 2000. And the due date is 5 days from the close of the month. So let's say, for example, you have a sale of real property on January 5. When is the due date for the DST and the CGT? We said for CGT, 30 days from the date of sale. So from the date of sale, we count it. So our due date is February 4 because we said we have 26 days left for January, plus additional 4 days for the 30 days due date, then February 4. How about for the DST? 5 days from the close of the month, therefore your deadline is February 5. Another example, the sale of real property, let's say, was made on December 27. When is the due date for DST and the due date for CGT? For DST, again, 5 days from the close of the month. So December, the next month is January plus 5. So our answer is January 5. Now for the CGT. That is 30 days from the date of sale. So 30 days. So for December, we have 4 days left, plus additional 26 days to get the 30 days. So your due date for CGT is January 26. January 26. Okay, so that's how we count it for CGT and DSC. Don't forget, CGT 30 days from the date of sale, TST 5 days from the close of the month. So in our examples, we tried to compute the due date, and I hope based on those examples, you have already learned how to compute for those due dates. Next, forms, we have your transfer taxes. Your transfer taxes can either be VAT, percentage tax, if ever that is onerous. If it is gratuitous, we have donor's tax and SE tax. So for onerous, meaning there's a consideration, VAT, percentage tax, excise tax. If it is gratuitous, it can be donors or ST. Now for VAT, as a rule, general rule, the due date is only 2550Q. Okay? For VAT, it's only 2550Q. However, taxpayers can still may, okay? The term is may, by the way. May is still file monthly. May still file monthly. However, the general rule now is that you file quarterly. So in short, sir, what if I don't file monthly? Is that okay? Yes. What is only needed is you file quarterly. So for that, for monthly, it is 2550M. The due date is 20 days following the end of the month. If that is quarterly, it is 2550Q. It is 25 days following the end of the quarter. So that's for that. Again, as a rule, quarterly siya, wala nang monthly. Pero, pwede pa rin daw. May still file monthly using 2550M if you opt to file monthly so that it is not burdensome for the taxpayer when it comes to the quarterly filing. For percentage tax, it is 2551Q. 2551Q. It is 25 days following the end of the quarter. So for example, end of the quarter is March 31. What is the due date? The due date is 25 days at the end of the quarter. So the next month is April. So due date is April 25. How about excise tax? The form is BAR Form 220 before removal to the customs. You must pay the excise tax before the removal of the customs. And generally, for transfer taxes that are considered onerous, that is either VAT, percentage tax, plus your excise tax. Next, for gratuitous, you have donors or ST tax. For donors tax, our form is 1800, 30 days from the date of donation. So as a rule, any considered transfer, so let's say transfer of a capital asset or through a sale, then 30 days. Donation, 30 days, if that is gratuitous. BIR form, 1800. While for a while back, for a CGT, you have your BIR form 1706 for real properties. And then for stocks, 1707. Next, we have your SE tax. SE tax is to be filed 1 year from the decedent's death, 1801. 1801. So again, donors, 1800, estate, 1801. VAT, percentage tax, and excise tax, normally, the form starts with 25. For VAT and percentage tax, and excise 22, 2550 for VAT, 2551 for percentage. Additional type of tax are your withholding taxes. We have your compensation. We have your BAR form 1601C for monthly, and then we have your annual. We have your 1604CF. Okay, monthly, 1601C. 1604 CF for annual. So monthly, let's say January to December, you need to file 1601. And for the annual information return, that is 1604 CF, you need to file. So this one, from January to November, you file 10 days from following the end of month. But for December, you file 15 days end of month. So for example, January, due siya ng February 10. February, due siya ng March 10. Pero pag December, due siya ng January 15. 15 days following the end of month. So yun lang yung iba dito. January to November, 10 days, end of month. December, 15-day, end of month. How about for annual compensation, annual information return, January 31 of each year following the calendar year. That's for compensation. For expanded, we have monthly, quarterly, and annual. For monthly, we have 0619E. For quarterly, we have 1601EQ. For annual, we have your 1604E. So if it is E, it is expanded. If it's C, it is compensation. However, for compensation, it is only monthly and annual. For expanded, we have monthly, quarterly, and annual. For monthly, we have 10 days following end of month. Quarterly, last day of the month following the end of the quarter. And then for annual, it is March 1. So those are for your withholding taxes. So let's have a recap. Again, the taxpayer can be considered as on-it or recurring. Okay, so if that is on-it, normally the on-it types are, we have your CGT, DST, and then we have your donors and your ST. CGT, it is due 30 days from the date of sale. It could be 1707 or 1706. DSD, 5 days following the end of month of the sale. Donors, 30 days from the date of donation. So this is BAR Form 18. And then we also have your estate, 1 year from the date of death. 1 year from the date of death. So the question is, when is it? This is 1800, right? So this is 1801. So that's for the on-it. For recurring, we have your income tax. We also have your business tax, and then we have your withholding. For income tax, you have either individual or corporation, individual or corporation. For individual, you have quarterly and annually. Quarterly, 1701Q. Annually, we have your 1700 or 1701. For corporation, we have quarterly and annually. Quarterly, 1702Q. Annual, 1702. For business, you have either VAT or percentage tax. So this is 2550Q and this is 2551Q. Last, we have your excise tax. So your excise tax, it is due on, you need to file it using BIR Form 220. And then we have your withholding. Your withholding can either be compensation or expanded. So for compensation, we have 1601C and 1604CF. Here we have 0619E, 1601EQ, and 1604E. So do not forget that. So taxpayer, determine if on-it, CGT, DST, donors, ST, recurring, we have income tax, business tax, and withholding. These items are in your 230T. This one, they are not included in your 2303. And generally, we say that the taxpayer is on it if it's one time, And recurring, if ever, that is a mixed income individual or self-employed or a business taxpayer in the form of a partnership or a corporation. So now let's proceed with your certificates for withholding taxes. So we already classified the different tax returns a taxpayer is liable depending whether the taxpayer is considered as a one-time taxpayer or a recurring taxpayer. Furthermore, we said if you are the withholding agent, you must be filings your compensation, withholding tax on compensation or expanded withholding tax. So generally, in a withholding, we have the so-called withholding agent. And then this withholding agent is the income payer. Then we also have the so-called income payee. This is the taxpayer whose taxes were withheld, whose taxes were withheld by the withholding agent. Okay, so the withholding agent need to file the withholding tax on your compensation or the expanded withholding tax. In return, they need to give the taxpayer the different withholding tax certificates, withholding tax certificates. So for example, the total payment should have been 20,000 pesos. However, there's a withholding tax of 5%. So this withholding tax of 5% is equal to 1,000. So generally, the withholding agent will only give 19,000 to the taxpayer, and the 1,000 will be remitted to the BAR. So with this 1,000, there will be a certificate given to the taxpayer, and the proper form will be submitted to the BAR. So what is that certificate? It depends on the type of withholding. If ever it is final tax 2306, creditable tax 2307, withholding on your compensation 2316. And if ever that is income payment not subject to withholding tax 2304. So for example, you have paid your contractor a certain amount of money. Contractor, a certain amount of money. If that is a contractor, is it an income payment not subject to withholding tax? Is it a final tax? Is it a compensation or creditable? Since it is a contractor, it is not an employee. Therefore, it is not 2316. Now, your only problem here is it a final tax or creditable tax? So generally, government, any contracts with your contractor or third party is not subject to final tax. Therefore, you will give BIR form 2307. So what if it is an employee? What if it's employee and you need to withhold? Then you need to give a certificate known as 2316. Again, when can we give a certificate? Only if there is a withholding tax that is withheld by the withholding agent over the income payee. So what are those certificates? We have 2304, 2306, 2307, and 2316. What you need to determine here is what type of certificate will be given. It depends on the income type. If the income type is not subject to withholding tax, 2304. If it is creditable or final tax, 2306 or 2307. If ever that is compensation, then 2316. Now, how does the taxpayer file? So we already know how to make a return. What particular return should be filed? The question is, where do we file? So the filing can either be manual using the offline EBIR forms, or it can be e-filing. For e-filing, we have your EFPS or online EBIR forms. So you can file either offline or online. But with the advent of your different BIR eServices, I think it would be better to file online. But if you can't, then you can file offline. Or you can also file manually by going to the different accredited government depository bank or different accredited banks by the BIR. Now, let's look into the amendment of your return. So we said you must have a TIN and you must file within the due date, or else you will be subject to certain penalties in the form of surcharges, interest, or compromise. And then you must file those either online or offline. Now, what if you think that there was an error on what you have filed? Then you can amend. So in amendment, any return, statement, or declaration filed shall not be withdrawn, provided that within 3 years from the date of such filing, the same may be modified, changed, or amended. In short, you can amend within the 3-year period from the date of filing. However, you cannot modify, change, or amend once there is already a notice of audit or investigation. So generally, the notice of audit or investigation you have learned already, or we have learned this already in the form of LOA or a tax verification notice. So once there's LOA or TVN, you cannot amend. But can you amend? Yes, the period of amendment within 3 years from the date of such filing. Now, for the rule on tentative return, the rule on tentative return, whatever you have filed can be considered as a final return. However, if you change it again and you amend it again, then that can be considered as a final amended return. So in short, whatever you have filed is considered a final return unless there is a final amended return. Sir, how does the BIR determine whether it is an amended return or not? Actually, in every form, there is a question whether that is considered an amendment or not. So you either tick yes or no. If yes, then we can say it is an amended return. If no, then that is considered as your first or initial return. Whatever is the return filed is considered final unless it will be amended. And that amendment is your final amended return. Now, assuming you did not file any returns on the due date, or you did not comply with your filing, we said that once you are subject to the different tax types, unless you already terminated your business, you are still liable, and you are still obligated to file your return. So what if you did not file a return? If you did not file a return wherein you must really file it, or you are obligated to file, then we call that open case. So what is an open case? Normally, open case is also known as your stop filer case. It pertains to a case created by the returns compliance system of the BIR involving a registered taxpayer who is identified to have failed to file the required tax return within the prescribed due date. So if you have failed to file the required tax return, then you have an open case. So again, a taxpayer can either be on-net or recurring. In recurring, you can be a business taxpayer or you are considered as employee. For business, that is partnership or corporation or a self-employed or mixed income individual. On-net, no Form 2303, therefore, no obligation to file always, okay? No obligation to file recurring taxes. Employee, no 2303. In short, no obligation. But business, there is 2303. Therefore, there is an obligation. And we said that obligation continues unless and until the taxpayer already terminates its business. So unless it is terminated, you are still obligated to file. So once you did not file the required return within the due date, we already learned the different due dates, then you have an open case. So what are the normal tax returns for a business again? We have your income tax, we have your business tax, and withholding tax. Income tax, that is either individual or a corporation. Business tax, either VAT or percentage tax plus excise tax. Withholding tax, that can either be a compensation or an expanded withholding tax. But as a rule, not all taxpayers that is registered is subject to a tax type of withholding tax. Only certain taxpayers. So be always mindful on the different tax types when to file it, because if you do not file it, then you have an open case. If you have an open case, you are subject to civil penalties in the form of surcharge, compromise, and interest. Now let's look into the reforms created by your BIR for tax administration purposes. And we call this one your BIR eServices. So I listed down here the different eServices of BIR and provided also their definition. The first one is e-registration. It is a registration for the issuance, payment of registration fee, and the generation of certificate of registration. But actually, this was already modified by your online registration and update system, or your ORUS. We also have your EFPS. This is the electronic processing and transmission of tax return information, including attachments and taxes due thereon. So we have already said that if ever you want an online filing, you can have your EFPS, but not all taxpayers can register to EFPS. Next, we have your EBIR forms. This can be online or offline, but generally it is offline. It is primarily to provide taxpayers with alternative mode of preparing the filing returns, which is more easier and convenient. Why? Because if you will file a return wherein you will just key in writing the different amounts, details, etc., it is too tedious. Now there is EBIR forms. You will just input the needed items, and then based on those input, it now determines whether the proper boxes were inputted or not. And once done, you can now file. We also have your EAFS. That is a web-based application system that enables the taxpayer to submit their filed income tax returns. So these are your audited financial statements and other recorded attachments online in PDF file format. Other BIR e-services, we have your ePay. Your ePay provides the link for e-payment channels of accredited agent banks that taxpayers can access for electronic payment of their tax dues and liabilities. E-payment channels accept online credit, debit, prepaid cards, and mobile payments. So if you want to pay online, use ePay, or you can go to the bank manually. Next, we have your e-ONET system. Your e-ONET system is a web-based application for ONET, and generally your ONETs are CGT, DST, donors, and ST. So but normally, if it's real property that is only purely e-ONET, so BIR Form 1706. Also have 1606. What is 1606? 1706 is CGT of real property. 1606 is normally known as CWT of real property if the taxpayer is engaged in the trade or business of selling real properties. So if you keep on selling real properties, 1606. But if that is considered as a capital asset, then 1706. So in short, if ordinary asset, 1606, a real property as an ordinary asset, 1606. A real property that is considered as capital asset, 1706. Furthermore, you will file your DSP in the form of BIR Form 2000 OT. And the newest one, BIR eService, is your ORUS, or your online registration and update system. And we already said that you can now apply for a TIN, update. You can also get your TIN ID using ORUS. Okay? So this is for your forms, filing, and compliances. Again, this is important for us to determine the different forms that we need to file based on their due date, and how does your BIR administers the collection and provides different e-services or channels for the taxpayer to really file and pay their taxes on time. That's it for this particular session.